Hi, I'm Quinn Nguyen at Intercom's, the Oil and Gas Conference in Denver, Colorado. Joining me now is Michael Rohleder, President at GMX Resources. Good morning, Michael.
Good morning, Gwen. How are you?
I'm great, thank you.
Good.
Let's focus on the last couple months for GMX and the market in general. You have diversified into the Bakken and Niobrara for increased oil and liquids exposure. How did you come about choosing these oil plays?
That's a good question. We've actually been working on this plan to diversify the company from a one basin, one commodity company for the last 2 years. And we were able to put together 36,000 acres in the Bakken, which is the #1 oil play in the United States right now. It gives us an opportunity to have maybe as many as 224 operated oil wells in and around other large operators. So it's a very proven, I would say virtually de-risked play for us. In the Niobrara, we had the opportunity to accumulate 40,000 acres, again in and around very large operators like Chesapeake and Devon and Noble. And it's a terrific exploratory opportunity and will contribute greatly to GMX becoming a company in the next couple of years with 50% of our revenue derived from oil.
And are you in the position financially to accomplish your drilling goals in those areas?
Well, obviously, our first and most important job is to make sure we have enough capital to prosecute our drilling plan in our new acreage. So we, of course, have been focused on that for a number of months and believe that we have enough liquidity to get through 2011 and through 2012, which will represent this transition period. In fact, we've used Intercom as an opportunity to present that information this week in our presentation.
And how are you addressing market concerns about a funding gap for your expansion and growth goals in the oil and liquids plays?
Well, obviously the market is abysmal for equities right now. And in fact, our conference call that we had 2 weeks ago for our Q2 earnings came on a day when the market declined 500 points. So I think not only GMX, but all of us were caught in that. And in a broader way, the entire market is caught there. But again, we're focusing on a commodity that is capable of delivering greater than 50% returns. And I don't know how many industries there are that can talk like that. So we're hoping the investment community will focus on the fact this is a high return play for us and that it has a huge impact on a company the size of GMX Resources.
GMX recently announced the suspension of operations in the Haynesville, which the company has for years touted as its growth opportunity. Now, given your shift towards oil, how should investors think about the Haynesville and your future in that particular play?
Well, we've obviously been very successful and very focused on the Haynesville, but we do recognize now that the economic opportunities that are represented in our oil acreage far surpass the natural gas economics. That being said, I think as an investor, they should consider that we have 2.2 trillion cubic feet of gas reserves in a virtually de-risked basin. So for me, that means all upside.
What else should we know about GMX Resources?
Well, I think we're in the middle of a transition. We have the upside opportunity of tremendous economics of the oil plays. We're in the Bakken, in the part of the Bakken that is the most active and has produced the biggest wells. So again, from an investor's point of view, I'd say this is a terrific time to look at GMX Resources.
Okay, Michael, it's been a pleasure talking with you today.
Thanks, Ben.
I'm Quinn Nguyen for oilandgas360.com.